WTF. Is bad news good again? After 9 consecutive green days, I'm starting to really wonder. Why? Because we got a fairly hot inflation print this morning, but the reaction was quite spicy too. There's your dip, and then we rallied by more than 1% off the low. But remember, whoa. Jerome Powell spoke this morning as well at 10 a.m. What did he have to say? Well, it wasn't sunshine and rainbows. He said that inflation has been higher than thought, expects rates to hold steady. We did not expect this to be a smooth road, but these inflation readings were higher than I think anybody expected, Powell said in Amsterdam. What that has told us is that we'll need to be patient and let restrictive policy do its work. Whoa. But is it working? Well, yes, look at this. This came out today from the New York Fed showing us that we actually see delinquencies going up, currently here at 3.2%. And this is quite interesting because if now we only put in one more green day, we're very likely going to be at all-time highs. If we finally put in a red day, we're probably going to slam back down to support. I'll show you the reason why this matters. It matters because the last time we had a succession of more than 6 bars in a row, here we have 6 red bars in a row. All right, what happened? Well, as soon as we formed a green candle, we changed the trend. So if tomorrow we form a red candle, could that be the change of the trend? Could we go down? 9 in a row was quite impressive. 10 would be very impressive. So let's try to better understand exactly what the market's doing, because if we're expecting a negative result from PPI, which is a leading indicator for CPI, but we didn't, look, it rallied by more than 1%. We're within a whisker of going to new all-time highs. So is restrictive policy working? Well, I think it is. We can see that right here. But this is where we get a wrinkle into the fold. Why? We're on the doorstep of getting back into greed. Only 1 or 2 more points and we will be there. And the market's not waiting. Look at GameStop, up by 200% in the last 5 days. This is not good because it's going to loosen financial conditions. If we look to the data point for tomorrow, May 15th, or CPI, this is the highest implied volatility day of the week. After that, we got NVIDIA. So if we now go back up here to all-time highs, hey, we can get over, we can back test, and everything looks gravy. If not, again, we went through this yesterday, so I'm not going to beat this dead horse too much, but have a look here. This is awfully close. We're looking at the number up here, which says H. Here we got 52461. Then we got 52438. What happened? Man, 5% correction. Okay, well, where are we now? Last month's high, 52438. Now we're at 523.83. We're within $1 of getting to that high. So if the trend changes with a red day, and we get a follow through, kind of like the 2 green days here, that could be the top. We could be going down like we just showed you here on that monthly chart. So this is starting to get a little bit complicated, but hey, when lines go up, people make money. So who are we to complain? Let's just make sure we understand what should be happening versus what is happening. Jerome Powell maybe would have added more fuel to the fire if we were down after that PPI print. We're not, though. We had a massive rally. And I think that's because this GameStop AMC momentum is really shifting to the broader market. If we're going to get a hangover, it's likely going to be tomorrow. We also even got a price target upgrade on NVIDIA today, which actually dragged the entire SMH complex higher. So when CPI comes out tomorrow, does it really matter what these numbers are? Well, of course it does. It matters because, again, the totality of the data. Whoa. But for making money by looking at charts, if you would have told me this morning these were the numbers, I would have said, well, probably down. If you would have told me this is what Jerome Powell's going to say, I probably would have said down more. I would have been dead wrong. What does that mean? We want to look for the reaction to the news as much as we look to the actual news. Now let's read a couple of headlines here for how the market is interpreting what Jerome said. But just before we do that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So if you look here to Jerome Powell, he's got a nice little pout on his face. Says inflation has been higher than thought, expects rates to hold. Wall Street rises after Fed chair's comments. All eyes on CPI. Fed chair's confidence in slowing inflation is not as high as before. Okay, we'll need to be patient. Stocks flat after remarks by Fed's Powell. Okay, so supposed to be down, but we're not. Oh, interesting. Maybe it's 1995. Remember, we don't want the Fed to cut. Usually when they cut, we get a big reversal. -36, -48, -27, -51, 58, and 35. Why? The Fed usually breaks something. However, no one talks about 1995 cut. Look what happened here. Cut one time, couple times, go flat. Then we get the nasty hangover in 1999. Is it really 1995? Are we really going to go higher? Well, I think that really matters. Now let's look at a few more charts because whether or not you believe it, the DAX is currently like either in recession or about to go into recession. But man, this chart's at all-time highs. How are we gonna argue with that? The price is up. But look here, it's very similar to what the S&P did. But this actually looks a little bit better because we actually got the bounce off of the 50 MA. So bounce, 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 then new highs. But look, green, 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 green. Then we got two red in a row. Well, that's exactly what we just talked about on the S&P. If we form those red candles and it keeps going lower from here, we're going to fall back below that previous high. That's exactly what we want to see on the S&P. Let's stop telling it what it's going to do. Let's just react, right? Plan the work and work the plan. So if we make it here, do we hold it? Do we close over? Do we get more continuation? Because as I've been saying, if we go higher and then we backtest, hey, in a perfect world, that's what I would like. Why? They would fill the hole at 512.55. We would slam and test that 50 MA. And we would also backtest and fill this weekly gap and test that weekly support one more time. I don't know if we need to, though. Looking here at the weekly chart, higher low, higher low, higher low, higher low. The other reason why this matters is because we talked about what a bottoming pattern is versus an expansion signal. We go here to the SPX, and we note that a failed breakdown is a bottoming pattern. It's not the only one, though. The important part for today is going to be the green one, where we close over the previous candle high, which signals an expansion. All right, now let's look here to the recent price action on SPY. Here we're looking at SPX, so just divide it by 100 for SPY. All right, close over candle high, close over candle high, currently over the candle high. Do you notice it? Here, I'll make the candles green to make it a little bit easier here. Oops, let's go back. Let's go to candles. Closing over the candle high 1, 2, 3 times if this holds into the close of the week. If it does or doesn't, we have to just make sure we react here. And I say that because I'm also noticing some charts which are looking a little bit funky. Let's go here to those meme stocks for one moment, and you'll understand the reason why. Well, yesterday we had a hollow candle, which means we closed higher than we opened. Today we got nearly, I think it was over 100% gap higher. But here's the interesting part. Look what happened on the gap. I talked about this on the morning stream. Yesterday's high, 588. What's today's low? 585. 3 cents lower. We fill the gap and bounced. That's classic bullish. How are we going to argue with that? Fill the hole, bounce off the hole. Okay. Well, what about the next one? GME did it too. And it's rallying after hours here. So it filled the gap. And from the low of the day, it's up by 47%, nearly 50. Whoa. We went through and built out this meme list together. A lot of them got really close here. We're looking for 217. Here we got to 226, awfully close. So a lot of charts still have fat holes, like here with SunPower, but a lot of them have actually filled. Look at cost, 2 hollow candles, closed the gap and actually went higher. So as we think about this, is this what Jerome Powell wants? Is this what's bullish for the market? Well, I'll show you one more data point here, because if stocks are going up and bonds are going down, that's the definition of bad news is good. The 10-year note actually put in a bearish engulfing daily candle when inflation actually went higher than anticipated. This seems really weird. Yes. Why? Well, because the market is saying that bad news is good. This is good because the Fed's likely going to have to do something. That's the way the market's voting. Do I agree with this? Hey, it doesn't really matter what I think. We're just looking at what the market is doing. Finally, just want to look at one more quick chart here, or maybe a few, because part of the story that's missing is Bitcoin. So if tech stocks are right around all-time highs, within 1% or 2, the S&P is within 1 point of making all-time highs. Why can't Bitcoin rally? This is supposed to be a meme thing too. Well, as of right now, there's no volume and there's no love. Same thing over here for Ether, where, again, just lower highs, lower lows, slowly fading. When we look across other stocks, so like the mags, we can see here that we already, did we make a new all-time high? I was away for a bit today. 40.49, 40.49, perfect double top. But man, this looks good. It looks strong. And we also had Google coming out and actually revealing their AI thing today. I'm not sure what happened, but that's definitely notable. NVIDIA got an upgrade as well. Look at this stock go, right? Stopped going down, bounced off the 50. This stock is looking really strong into that big catalyst we're going to be looking for on the 17th. Sorry, on the 23rd, or a 17% implied volatility move. So market is moving fast. What I would really encourage you to do is to make sure that you're not falling victim to your emotions. You make a plan and then stick to it. All right, watch the video on the left if you want to see my weekend prep. If not, subscribe on the right, and I'll see you guys at 9:15 and 9:30 tomorrow. Thank you very much.